following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means that it is time once again for the Option Block, everyone's favorite options program. And if it's not your favorite, well, then clearly you're doing something wrong. My name is Mark Longo from the OptionsInsider.com, as well as from a little thing we like to call the Options Insider Radio Network, upon which many of you are listening to this fine program right now. And if you're not doing something wrong, you can listen to it however you like. This show is disseminated hither and yon. You can find it, of course, on our website, iTunes, Stitcher, Aha Mobile, maybe built into your in-dash system with Harman Kardon, or however you get your podcasts of choice. We like to be there. And if there is a way you like to listen to shows and we're not on it, let us know. We will get on it. We're also working on putting together a nice mobile app for all you guys out there to make it even easier for you guys to access this fine content wherever you may be. So stay tuned for that coming in the next, probably I'd say in the next month or two, once we get all of those I's dotted and T's crossed. And I am joined today, we got a little bit of light panel to start, but it'll pick up towards the end, don't worry. We got a bunch of Johnny-come-latelys on the old show today, but never fear, the Viceroy is here to hold down the fort with me. One Alex Jacobson from Options Express, wearing his fanciest of Viceroy hats. Alex, welcome back to the show, sir.
Hey, Mark. Good to be back. A very interesting and trying day in the markets today, with NASDAQ being closed for 3 hours today.
Hope you got your talking pants on today, Alex, because it's me and you, baby. We're going to light it up.
Yeah, let me tell you, today's going to require more than a tire. It's going to require some alcohol and a steady hand.
Well, it is a good thing you have some alcohol on hand, because I'm not sure if you know this, Alex, but today is actually the single biggest holiday in the Options Insider pantheon. Bigger than Christmas, bigger than New Year's, bigger than Tet, all rolled into one. It is, of course, my birthday, so a big day, and I thought, what better way to celebrate it than with you here on the show, talking to all of our friends on the Options Block program. So very excited to be here. It's a fun way to spend my birthday, sir.
Happy birthday, Mark.
Thank you. Thank you very much. And as I think with those well wishes in place, Alex and I shall kick off the program proper with the Trading Block.
The Trading Block.
All right, and those bells mean that it is time for the Trading Block. Of course, you've been listening for a while by now, and if you're one of the new people, you can catch on pretty quick, I think. This is, of course, the portion of the program where Alex and I today run down the interesting developments in the old market. And as Alex alluded, it was a bit of a weird one today. Let's start off with where everything closed, which is a weird thing in and of itself, because some things weren't exactly trading alongside each other for most of the day today. We have most of the major indices closing up Dow playing the laggard today, only up not even 0.5%. The S&P up nearly a full percentage point on the day, or about 14 handles, to 1657 roughly. And the NASDAQ, the ever problematic NASDAQ, leading the charge to the upside, up over 1%, or 39 handles roughly, to 3638 on the day. The VIX cash, which had been enjoying some time above the 15 handle, now drifting back down over a full point, a point and a quarter, to 14.7 today. So some interesting action going on today, but I think the actual movement of the underlying and what was driving that, some news out of the Fed and some other things like that, took a bit of a back seat to some of the behind-the-scenes stuff that was going on the street, both today and 2 days ago. And unfortunately, maybe we'll start with today, and then we'll dial it back even more. Of course, today was, if you paid any attention at all, you noticed a lot of the names you probably like to watch, like Apple and others, weren't exactly moving a heck of a lot. And that's because the NASDAQ actually had to shut down for a while over a technical glitch. It was in their Type C listings, which you might think, well, that's only a limited amount of their listings, so that's all the underlyings that begin with C. No, Type C is pretty much everything they got. So that was a pretty serious snafu, and that caused a lot of people to scratch their chins and wonder and say, what the heck is actually going on here? And they were out for quite a while. And I'm guessing, Alex, when you were joking before about needing a good drink, that caused a lot of, shall we say, enthusiastic OX callers today.
Yeah, and unfortunately, there just isn't a lot you could do on a day like today. The day it actually started out good. I mean, people digesting Fed notes yesterday, and we started out up. It was a good day, even with the 10-year bouncing around 290. And then right around noon, NASDAQ said they're out. And a lot of the business we do up here is in the options on the NASDAQ names. So a lot of what lights up the phones here is Apple, Google, and Priceline, and it just went to a dead stop, and it took them 3 hours to get back. And I imagine we're like every other firm on the street right now. We're getting fills for a while. Now we're getting some busts. And as soon as that starts, I hate to say that's when the attorneys come out and start passing the papers around that say this is what you can say and this is what you can't say. And it's a very, very tough day. And unfortunately, the industry doesn't have uniform. This is when we stay open. This is when we shut down. I mean, this is the second event this week. It was Goldman earlier in the week, and you read a lot about obvious error and why the Goldman problem wasn't as bad as the Knight problem, and maybe we'll get a chance to expand upon that a little bit. But listeners need to be aware that this is going to sound like a bad joke, but no matter who you're trading with, have the 800 number. If you're trading online, have the 800 number of the trading desk handy. And on a day like today, if you see you're not getting a fill, I mean, a lot of what was going on in NASDAQ for the first few minutes today was akin to the day of the Facebook IPO, where all of a sudden you weren't getting reports and you weren't getting cancels. And don't sit there and play on the machine at a time like that. Pick up the phone, dial the 800 number, get a sense of what's going on. Here at OX, we've got terrific people on the desk. It doesn't cost any more to talk to the desk, and at any brokerage house where they do charge more to talk to the desk on a day like today, I'd expect they would waive that. But it's just not a fun day for the industry. So, I've talked about before about my son who's a computer science major, and I told him what was going on today, and he kind of shakes his head and says, "Where's the redundancy? Where's the?" And I told him the story 10 years ago about when NASDAQ shut down because a squirrel allegedly had chewed a power line. And he said to me, "Dad, what's the real story?" And I said, "No, man, that was the story." But today was just a difficult day.
Now, you touched on the Goldman issue 2 days ago. It has been quite the tech week from an options perspective. I know when my phone starts ringing off the hook, from outlets that don't normally cover the options market that something is clearly amiss, and that certainly started happening a couple of days ago, and it's been continuing today with all these nonstop glitches. I think what we'll do actually is, because we have a question about this directly, rather than saving it for the mail block, we'll just read this question and incorporate it here into the trading block, because it's about what you were just talking about here with the Goldman issues. It's a question from T-Pal. He says, should I be concerned about the wave of technology problems impacting the market? Can they impact my trading? I saw Mark L. quoted a lot on this. What's his take? And that's a good question, Mr. T-Pal. A lot of people wrote in with similar sentiments over the past couple of days. If you're not familiar to what he's referring to, Goldman kicked off the day 2 days ago, putting out a lot of essentially clearly erroneous trades. If you're a big market maker or a big trading firm, you have to set up your stuff at the beginning of the day. You set up what you expect your volatilities to be in the different underlying. You set up where you think your skews are going to be. And usually that process gives you a decent anticipation of where you're going to be in the opening rotation and how things work, and essentially give you a good opening glimpse for the day, and if you're off a little bit, you adjust it. But it's something happened over at Goldman where maybe they were using an old prices, maybe someone hit the wrong button and they just jacked their vol up to the roof. Who knows what the actual cause of it was? You might think, oh well, that's a bonanza for customers and market makers because they're getting puts that should be worth $1 and they're selling them for $20 and vice versa, and all kinds of great things. And maybe on the surface it may seem that way, but what that actually is now a lot of risk for a lot of people, particularly the market makers, because you have these trades coming into your book that are probably very clearly erroneous. And so the question now becomes, what do I do with this? Do I hedge it? That's what market makers usually do. They try to lock in profit and edge in that sense. So their clear action is to hedge it. Sometimes they might even auto hedge a trade like that. And yet this is the trade here probably is going to get busted, but you don't know. So if you hedge it, you're locking in essentially what could be a loss, because if that trade ends up being busted a couple hours from now, that trade goes away, but the hedge is still on, and usually the hedge is probably a loser in that scenario. So there's all kinds of issues that could unfold there, and what we saw is a lot of market-making firms initially hearing that it was market makers on the other side of that trade, so the trade was going to be adjusted and not busted, and then that ended up changing, and they were all going to be busted, and there was a big furor. It was a lot of craziness. But the moral of the story is a lot of this stuff probably won't impact you. Like, for example, NASDAQ clearly did, because that was a bigger issue beyond just the options today. They shut down the whole exchange. Over at Goldman, it was issue mostly focused on JP Morgan options. They were doing a lot of contracts in there. So if you happen to have some orders working out there in JP Morgan, you may have gotten an interesting fill. And that's probably where perhaps it may have impacted you. And actually, that's a good question, Alex. I'm sure a lot of OX people have called up over the last couple of days asking you guys to clarify OX's policy on this. So what does OX do in a scenario like this? Let's say an OX customer is working an order out in JPM and they get a fill that is clearly erroneous. What's the procedure there?
So every exchange has an obvious error rule. And essentially those rules, first of all, they're not uniform across exchanges, which that's not a good idea. But essentially they're distance from the norm, so that if the last trade, and this is why it's so interesting to have it in an opening rotation, most of the obvious error rules are based on an underlying price in a metric or the last trade. So, for example, today the obvious error rule would be addressed by the last trade, but the challenge at an opening rotation is the rules are fairly, I don't want to use the word arcane, but they're difficult. What does OX do? Okay, so this is the kind of peek behind the curtain. Number one, we wait for the exchanges to see what busts. And that's frustrating as, I don't want to use four-letter words here, but it's just remarkably frustrating. Then we look at what's busted and decide what we should fight over, what we need to go back to the exchange and say, this is a bogus bust. This was within the range, and this customer is entitled to a fill. And at that point, having worked both at exchanges, you're looking at the market makers who provide the order flow, and they're going to decide if they want to see order flow from that provider again. So, I mean, I hate to make it be that graphic, but if we think a customer is entitled to a fill, and we've done our homework, and there's been a bust, we will work to try to get that fill. If we can't get that fill, we'll work to try to do some type of accommodation. But I can tell you, when I worked both at the SIBO and the ISC, that oftentimes market makers or DPMs didn't do the job as crisply as they should have done. And what would happen then is a competing market maker or DPM would go lean on the firm and say, you're not getting good service. You ought to consider moving the switch here or changing the router to here. And candidly, that's the motivation for the market maker who has the business to do the right thing. Market making is very concentrated today. Goldman on some days might be as much as 1 in every 4 or 5 option trades. Most of the market making is Goldman, Citadel, Susquehanna, Timber. If I'm leaving somebody out, it's not by design. And they will have relationships with all the firms, and they will have essentially an agreement that says, if you point your smart router to us, we're going to give you NBBO. When there are ties, this is how we're going to break them. And when you have problems, this is how we're going to resolve them. So customer service is a big deal. But unfortunately, here at OX and everywhere, the first thing we have to wait for are the busts, which are infuriating as all get out. And you hope the busts are timely. You'd like if the market stopped trading at 12, that you get the busts before the market reopens, and candidly, you don't always do that. Some exchanges are good about it. Other exchanges, I won't name exchanges, but I can tell you when I went into our head of trading today and said, what can I say on the show? He said, well, we've spoken to some of the exchanges, and many of them have been timely and gotten back to us, and a couple have said, you'll hear from the compliance and legal people tomorrow. And I don't want to say you want to turn those guys off for a day or two, but you want to turn those guys off for a day or two.
Yeah, that's probably the response a lot of people have. The moral of the story here, Mr. T-Pell, I believe it was, is you don't want to be on the other side of these trades. It may seem like a bonanza, you're getting this great windfall, but your best case scenario in these types of situations is that something's going to get adjusted to about the price it should have been anyway, in which case you're just getting a regular trade. And in the worst case, it gets busted. And in the meantime, you have hours, perhaps sometimes, as Alex just said, and perhaps even days of uncertainty as to whether you even have a trade on to begin with. And that's the worst case scenario. If you don't know you have a trade, you can't spread it off, you can't do other things with it, you don't know what your actual risk is. So it's not worth it. Don't wish for one of these, bonanzas to fall in your lap, because if it's really good, it'll get busted or adjusted. And in the meantime, you got hours of headaches ahead of you, if not days. Yeah.
Yeah, and one other comment I'd make is if you have a bunch of open orders, cancel them. Cancel them. I know it's a blanket statement, and I know I get a lot of heat for I'm sure we all get heat for some of the things we say, but on a day like today, I don't want to leave orders out there. I'm short a weekly Apple. I'm short the 540 Apples expiring tomorrow. And this morning when Apple was open, they were trading 4 cents, 5 cents. And I don't know if this is the way the market makers' machines run, but as soon as Apple closed, the option defaulted to the maximum legal width, which means it was trading 5 cents, $5. And that shouldn't be. It simply shouldn't be.
I laugh because we've all been there, and it's atrocious.
Yeah, and that's some market makers in their automated risk management, when they lose price feeds, they will immediately adjust the wings to what I'll call the maximum allowable width, or what I would also call the worst possible market you could imagine. So that's why I just don't want to have a lot of resting orders out there. But in the end, the relationship is between you and your broker, and your broker's either going to have to fix it or either be an advocate for you, and there are lots of ways for brokers to be advocates. Keep in mind, if you look at the large e-commerce discount brokers, firms like OX, we're about 5% of the daily trading in total volume. And that gives us a lot of influence. Does that mean we can do magic? No, but if a market maker doesn't give us what we think is a reasonable solution, we throw around our weight.
Speaking of throwing around your weight, we are also joined now, as I said, better late than never, by indeed the largest, surely in terms of stature, panelist here on the Option Block All-Star panel. You know him, you love him, as Uncle Mike Tosaw, beaming in all the way from scenic St. Charles, Illinois. Uncle Mike, welcome to the show, sir.
Always happy to be here, and happy birthday, Mark.
Why, thank you, sir. It is indeed, as I said at the top of the show, one of our favorite days here on the Options Insider Radio Network, and what better way to spend it than with my friends here on the Option Block and all of our listeners.
I have a hard time thinking of anything I'd rather be doing on my birthday.
Well, I'm sure you had a lot of stuff taken up your BBI today, particularly one of your favorite names, Apple, persona non grata today. You couldn't get at her. So walk us through your day a little bit of what your take was on how your baby you couldn't get access to and how that impacts some of your trading today.
We're having separation anxiety, I tell you. Well, with what we're doing right now, the position that we have on it is that we're long the shares, also long the April 450 puts, and we've been selling credit spreads on it, on the put side of it, at various ratios for a while now. And so yesterday I got out of the 480, 490 put spread for a few cents, nothing big, and we had made a decent profit on it because Apple's just been kind of puttering around the 500 level. It went up to about the above 510, and then it came back down. But the time decay had enabled us to profit, and so my thought was I had every intention of getting into another spread today, and so all of a sudden I'm looking, and Apple's just not moving. And so I'm thinking it's my quote monitor or something like that. This stupid internet went out, whatever the case may be. So I turned on the news, and sure enough, the trading had been halted. I found out the news on it. And so immediately when that happened, the fact that my position in Apple was long stock, long put, and that's all, I went, phew. And it was a big sigh of relief to me. And here's why. Not because I didn't have the put spread on, because that would have been for a very small amount of the overall position. That wouldn't have been a huge risk, although that was kind of nice that it worked out that way. It made the uncertainty of the not having trading ability a lot better. But the reason with which I was very comfortable at that point in time is going into right before Apple was, or right before the I don't know what you want to call it, the trading halt, the blackout, whatever you want to call it, right before the trading halt, Apple had just dipped below 500. And so, it didn't happen, but I know there's some of the talking heads on TV had a theory that maybe there was just so many stop orders on Apple that it flooded the system because Apple actually went below 500. Now, I wasn't really concerned with that. I didn't really think that was happening, but the reason with which I was resting easy is because of the fact that when you're long premium, uncertainty doesn't concern you as much as when you're short premium. So what I have to say right now is for the people who like to just get out of stocks when they think they should buy a put, that's when it's time to get out of the stock. Well, how could you have gotten out of the stock today with Apple? You couldn't have. We were long puts on it, and I felt very comfortable throughout the entire time frame. So moral of the story is that yes, there's times that it makes sense to just get out of a stock. I'm not denying that. But things like this actually do happen. And when you have a protective put underneath you, it really makes the whole thing a lot easier to bear, I have to be honest.
It's funny, I was going to bring up the exact same thing. All these naysayers out there who say, why would you possibly want to buy a put? You're betting against yourself. Just sell the underlying. This is a perfect scenario why it's nice to have some premium in your back pocket. You can breathe easier, take a little bit of a sigh of relief. It's not as worrisome of an event. Clearly, you want to know what's going on with the underlying, and that is an issue of concern. But you're not as worried as if you were just A, blasting out premium, or B, had no put on at all. In which case, you're pretty much glued to your screens saying, good God, what is happening? What is going on with my position? So this is clearly a scenario in which having a little bit of hedging, a little bit of premium in your back pocket is a good thing, regardless of what the naysayers may think. Anything else catch your eye in today's trading action, Uncle Mike?
Well, I think there's nothing that's going to Nothing to that magnitude, no. I mean, I saw that, just looking at TLT, we had a little bit of a bump up in TLT, and just looking at IEF, that was relatively flat today. But other than that, nothing to the magnitude of what we had in the NASDAQ today, no.
I saw a headline today, and it made me think of you, Uncle Mike, for the show today. We see that our friends over at S&P and the Dow Jones indices are launching 2 new metals futures indices. So it seems like they're trying to add more ways for Uncle Mike to play with them in the marketplace these days. These are going to be, looks like, a little bit more broad-based ones that are, quote, economically sensitive characteristics of industrial metals. So does that blow your skirt up there, Uncle Mike? You're going to be diving into these new, I don't know what the tickers are here. GSCI, is that looks like that sounds right? So yeah, I don't know. 2 new indices for you to play with, Uncle Mike.
I'll definitely take a look. Now, whether it blows my skirt up or not, that remains to be seen.
You are a difficult man to blow his skirt up, particularly when you're out there bagpiping. That skirt stays rock solid, I've noticed. So hats off to you, sir. Hats off to you. Last thing before we move on here, I know Nat Gas was moving a bit today. I know you like watching the energies out there, watching Nat Gas, Chesapeake, some of these other players out there. Have you been playing it all? Do you play it all in UNG or any of those ETFs that dive into the Nat Gas sector?
I wouldn't touch UNG with someone else's money, or my own for that matter, unless we get some type of weird option skews like we had 4 years ago, which was you could actually do conversions and reversals on them briefly, which that was fun. But unless we get that again, then I don't have any intention of messing with UNG. But yeah, we do have exposure to Chesapeake. We've been in Chesapeake this whole ride to the downside and to the upside. I've sold a lot of premium on Chesapeake. Right now we're short the September 25 covered calls. We're also collared on FCG, Frank Charlie George. That's a natural gas ETF. It's a natural gas stock ETF. Actually, Alex's buddies over at the ISE, they're the ones that do that one. And I think that long term natural gas is a buy for sure, for a big variety of reasons.
So you're down on UNG, but you love FCG. So there you go. The crazy world of energy ETFs. Everyone has their favorites. All right, thank you for that, Uncle Mike. Thank you, Alex. And now we're going to close out the old trading block and keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we dive into the weird and wacky and sometimes just downright bizarre world of options. We're going to kick things off on this fedora-clad segment with Express Inc., ticker symbol EXPR, closing today at $19.79, down about 3.5% today on the day. So a bit of an active day for Express from an underlying perspective. Also from an options perspective, this is the name that really does, pretty much nominal volume, 600 contracts a day. Lighten it up today, nearly 9,000 contracts today, with a lot of that coming out in some, it sounds like it's longer term because September sounds so far off, but in reality, it's just front month now. It's the SEP 17 half calls going up on some decent size here for Express, 2,000 times with a total. Let's see what the total was on the day. About 2,000 times total on the day for prices between $2.75 and $3. Looks like opening buys here, particularly because there's only one contract of open interest on this strike. You got to love when it breaks down that way, because that just, something's opening somewhere at that point. But it looks like we also saw the 20 puts going up today too, 2,000 times as well. So perhaps there was some guts strangle action going on out there in Express
weird.
land.
I mean, I didn't see that stuff earlier. Just this buy was it was so lifty, the offer type, really pushing this up. So, I mean, they're either buying it to get long or they're buying it to back spread it. Either way, I think they're looking for a pretty big move on earnings. And I guess some of the retailers are kind of in smack lately. Maybe, doesn't Express own Victoria's Secret and all that stuff, the limited? So
I believe so, yeah.
So maybe they're going to, I guess women need bras, all the time, not just, times are good. So
that might be the title of our show. Women need bras all the time, says Andrew the Rock Lobster from Option Pick. Can I quote you on that, sir?
Sure. That's my fundamental analysis for the day for Express. But either way, somebody's expecting a pretty big move to plunk down that kind of change, I think, in Express. So maybe this is a surprise to the upside in here.
Yeah, it could be a back spread. I'll have to dig further to see what those puts are. Like I said, I mentioned a gut strangle. If you're not familiar with that, listeners, people usually, when you buy a strangle, you buy the out-of-the-money call, you buy the out-of-the-money put. It's cheaper. You get that big bang for the buck if the underlying really moves. A gut strangle is kind of the opposite. You're buying the in-the-money call and the in-the-money puts. I don't know. I'll have to look and see what those puts, if they were a buy or a sell. But it's just an interesting trade. You don't see it go up too often. That's why I had to mention it in case it was going up there. I can count on probably one hand the number of times I saw gut strangles go up when I was on the floor. So a very odd trade. But interesting stuff nonetheless out there in the land of retail where, ladies got to buy bras all the time. And we're going to keep on.
Well, yes.
Did the bras, let me ask you, did the bras go hand in hand with the see-through yoga pants as well?
I think you need to buy the bra before you buy the see-through yoga pants. But if it's see-through, what does it matter? Yeah. I mean, you gotta go with what you gotta go with.
Then you're leaving nothing to the imagination. This is a good odd block so far. I like where it's going. It's taking a good turn for the better. All right. Next up, we have Accuray Incorporated, ticker symbol ARAY. Another odd block special. Kind of one of these little known names, trading $6.25. So a little pricey from odd block perspective, but still interesting. Pretty much unched on the day. This is the name that does a whopping 247 contracts a day. Another one really lighting it up today, doing about 7,000 contracts today. So this was an active day, to say the least, here for ARAY. And looks like, we talked about gut strangles before, looks like this is the opposite, or perhaps a risk reversal / collar. We saw the D5 puts and the D7 half calls both going up about 3,200 times for a variety of prices here. It looks like, was this so this is buying on the puts and buying on the calls. This is the strangle then.
I think so, because vol in December was up 4.5 points. They have earnings on the 27th. I mean, the volatility is 82. The 60-day realized volatility for the stock is 36, and the D Sigma in December is 82. So I don't know about you, but I think somebody's buying something in there. If they were just trading the risk reversal out or collaring it, I don't think the vol would be jumping that much, because that would be vol neutral. So I believe there's buyers. There's buyers and buyers, even though there's a lot of open interest on the calls, Mark. So it feels like somebody's just buying stuff.
Alex, does that really just rub you the wrong way, seeing someone coming in and paying $1.35, roughly 22% of the value of this underlying for a D-strangle?
I don't allow it to rub me the wrong way anymore. I sit here quietly and grit my teeth. So
I could hear your teeth gritting in the background. That's why I wanted to draw you in.
And he sips his cocoa and he puts on his cozy robe. Or was it his slippers?
Fuzzy bunny slippers. That's what it was. His fuzzy pink slippers. And then all is right with the world. And then everyone could buy 22% strangles all day long. And Alex is happy because he has his cocoa and his bunny slippers.
Doesn't take much for me.
So yes, if someone clearly thinking there's a pop in the future here in ARAY, either that or they just got money to burn, because that is a substantial premium any way you want to cut it for a strangle out there. Given a name that hasn't really moved too much of late, this thing's got to really kick into high gear for that strangle to pay off.
This was my favorite thing about this. Okay, I just had to pronounce this. Their core product is the CyberKnife Stereotactic Radiosurgery System. Whatever the hell that is.
Wow, that sounds like something from Terminator. It's going to come back to the future from the future and kill me.
The doctor says, "Okay, I'm going to come out. I'm going to perform surgery on you with my CyberKnife Stereotactic Radiosurgery System." Would you run screaming out of the room? No wonder why it's a $6 stock. They got a stupid name for their product.
I mean, just if you're doing your little bit of math at home, this thing's got to go to 365 on the downside for this strangle to start paying off for him. That's an aggressive move.
Right.
Or you're talking 885 on the upside. This is an aggressive strangle any way you cut it.
I thought so, and the thing too is, and the reason why I thought it was buying, because it printed 80, 81 earlier, and then started printing 85. So, I only got to assume somebody's continuing sort of the buy train on this.
I don't know. I can't say I'm overly enthused by this trade. This is a good one to highlight as probably more money than sense type of trade. There are a lot of great ways you could have done this cheaper and much more efficiently with a much better bang for your buck than this. So this gets into our mantra of the size money, not always the smart money. I think this one certainly follows suit. We'll wrap it up here with a really, really quick one here. We're probably going to talk about energy a little bit later in the show, but for now we'll dive right into a very specific area of energy, uranium. Uranium Energy Corp, ticker symbol UEC. This is a true odd block special. $2.34. Now that's more like it, Mr. Andrew. None of this $6 stuff. None of this pricey premium
Sorry
stuff.
about that.
This is
that Hermes stock, those Hermes stock prices. We don't want to see
exactly.
those.
That's too rich for my blood. We've got this is the name closing at $2.34, doing a whopping 266 contracts a day, doing about 500 today, so 2x that. Pretty much all of that coming out in the OCK 2.5 calls. We got someone rolling up and just gobbling up nearly 500 of those for about 15 cents. So lifting offers here. So someone liking uranium, someone liking UEC, taking a not as aggressive bet. These are essentially at the money calls here. Certainly not as aggressive as our strangle friend from 1 minute ago. Still an interesting one if you're watching uranium. Someone liking some upside here in UEC. Not too much to parse here, Mr. Andrew, except someone likes some upside.
Yeah. I think the range of the stock is like 265, 245 too. So yeah. Maybe I guess they're going to strike it rich and actually find some uranium. I think it's an exploration company is what it looked like. So, it possibly could be they're finally going to strike some pay dirt. Or maybe just now that everybody knows that the Fed's going to taper, they're going to go out and just start buying out of the money calls and everything and think the world will all be grand again.
There we go. There's about 3,000 contracts open on the NOVE 2.5 strike, so maybe there are some longer-term bulls, and this guy's coming in more in the near term. That's pretty much the only strike with any substantial open interest out there, except for the Feb of next year. A 15 cent call that's only 10, 15 cents out of the money is, you're not taking a huge gamble there. It's very hard to get 40 volatility in the $2.5 stock, but somebody's found it. Pretty cheap. There you go. Cheap juice, another chapter there for your book, Andrew. And that is going to do it for the trading block today. And now we're going to keep on rolling right on into the strategy block.
The strategy block.
All right, listeners, and welcome to the Strategy Block. This is, of course, the portion of the program where Uncle Mike comes on down from the mountains, stone tablets in hand, to dispense some options, wit, and or wisdom. Uncle Mike, we've been so busy with all these various glitches and snafus in the markets that I haven't had a chance to check in with my birdies, traitorous though they may be, and see what you have going on out there. So we're flying blind completely, Uncle Mike. So why don't you let listeners know what wit and wisdom you plan to dispense today?
Well, two things. First off, the birdies told me that they don't like the quality of birdseed with which you're giving them. So you got some birdseed issues.
Because they're traders, and that's what traders get.
Yeah, that's just unacceptable. So the people shall revolt. That's the way it goes. And then second thing before I get into it, just want to clarify why I have a position in FCG and not UNG. FCG represents a collection of stocks that are natural gas based and not the commodity itself. So just wanted to clarify that that is the main reason why with which I have exposure to that one and not UNG. I don't like the way UNG tracks natural gas. So anyway, with that, in this marketplace, just over the course of the last few months or just over the course of this year, it may have happened that you may have been in a stock and sold a covered call on, and the covered call went in the money. Now, that's quite the conundrum for a beginning trader when that first happens to them. Yes, of course, it feels good to have made money, and that's good. But a lot of times it feels like you're missing the boat when you sell let's say you own XYZ stock at 50 and you sell the 50 covered call, or let's say the 55 covered call for $1. And then once it's trading at like 55.22, you're at a slight loss on the call, but you had a pretty nice gain on the stock, let's say. So what are some ways with which you can trade that? And quite frankly, in my opinion, more importantly, what are the ways with which you need to think about it? Well, step one, if you have a covered call that goes in the money, I like to emphasize the point of doing a cartwheel. And I've taken criticism from this from people in the past, but the reason that I like to do a cartwheel is because of the fact that, well, number one, let's just say I like doing cartwheels. But number two, the reason that I like to do a cartwheel is because of the fact that I'm ahead money, meaning that I made money on the trade, and the bottom line account value is greater today than it was before I got into the trade. Now, one thing that I want to caution you about if you're a beginning covered call trader is don't try to become a perfectionist trader. Perfectionist traders typically end up slitting their wrists when they make money. They go insane. They're a weird breed, the perfectionist traders. A perfectionist trader has the expectation that the stock is going to go directly to his or her short strike price on a covered call and stay there just for them until expiration so that they can have their cake and eat it too every time. Doesn't work that way. So what I'd encourage you to do as a covered call trader is, number one, plan on not getting a full profit. Now, at what level do you want to get a profit? Let's say that you, on the good old-fashioned expiration risk-reward graph, you see that the most you can possibly make on the trade is $100. From the stock going higher, the covered call expiring worthless, and commissions are factored in as well. Let's say it's $100. What I would recommend that you do for a trading plan is have something along the lines of possibly saying, okay, as soon as the overall trade is ahead $80 or $70 or $60 for that matter, that's when you get out of the trade and you make your goal less than what the ideal trade could be. Now, let's say you want to get a little bit more advanced. Something that I do is I'll say, okay, if I can get to, and I'll just say $100 is the ultimate profit on the trade, we'll say. If I can get a $30 profit after day one, I'm out. If I can get to a $60 profit after day two, I'm out. And from day three on, if I can get a $70 profit, that's what I'm looking for, and that's when I get out. And of course, I have the loss side adjusted in as well. Using time is a way with which you can take that to the next level. And I'm just making up times and days. Maybe you can say after week one, after week two, after week three, whatever time frame you want to use. But that's the concept with which I would recommend when working with covered calls. Me personally, one of my general rules whenever I'm selling premium, I'm not necessarily looking at the price of the underlying. This is if I'm selling a covered call, I guess I should say. I'm not looking at the price of the underlying so much. What I'm looking at I'm looking at the price of the underlying, but what I'm looking at as to when I get out of the covered call is when I can get out for 20% of what I initially took in for the premium. Just because of the fact that that last 20% is very difficult to get at times, and a lot of times it just starts to hang on and it sticks in my craw and it drives me nuts, and then I have to take birdseed away from my birdies, and that's the last thing that I want to do. Now, let's say it goes in the money and the stock's continuing to go higher. Should you roll up, meaning you buy to close the short call that's in a losing position and sell to open another one, maybe a month out, the up and out roll as I call it, as a lot of people call it? That's one choice. But one thing that I've been doing lately, and it's actually paid off. Now, of course, if the market wouldn't have gone my way, it wouldn't have paid off. I've actually just let the covered calls go in the money a little bit. And then I do kind of like a trail, so to speak. And this is something that I've had some success with on the weekly options side of it. So let's say that XYZ stock, it goes to 56. And I originally took in $1 for my 55 covered call. Well, at that point, especially if you have a shorter term option, you're also going to have a lot of time decay in your favor. So by that method, then you can be a little bit more patient in terms of rolling up. So instead, normally, let's say that you roll up right when it touches 55. If you have a shorter term option, then maybe you can wait till 56 or 57 to roll up to maybe the 56 or 57 covered calls. I don't know. I'm just making up numbers as we go here. But my point is that don't be afraid of trading with your covered calls in the money. If someone does call you out early on it and you get an early assignment, folks, that's when you really do a cartwheel, because then you can start the process over. You just got some free time decay out of the deal. So, moral of the story, if your covered call goes in the money, there's a lot of choices with which you have on it. Make sure you choose the right thing and have a plan before you get into it. And on top of that, feed your birdies well.
Lest they become the traitorous birdies that I have floating around me today, that it can't be trusted. I take the Game of Thrones route with traitors, so if they come back here, they shall be dealt with accordingly. Let's just leave it at that.
Oh my, I got birds flying all over my room here in fear. They're scared to death right now. Mark, what did you say? I think
there's good stuff awaiting them. Perhaps a little bit of a early Thanksgiving sampler when they return. Let's just leave it at that. All right. Before we dive further down that rabbit hole, let's keep on going right on into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the program where we all let you know what we're watching for the rest of this here week into the old weekend. Of course, that is if the trading glitches subside and we can actually get some trades off tomorrow. We'll see. Mr. Andrew, let's start with you. What are you watching for the rest of this week into the weekend?
Mostly kind of like short, long theta trades. I know it freaks everybody out to hear me say that, but waiting, I guess. Okay, now we just go through this. We're going to wait for non-farm payrolls beginning of September, and then we're going to wait another 2 weeks. So it's like wait and wait. So I don't think we should see a whole lot of action over the next couple weeks. So we're looking at we have just more sort of short data on. The vol products don't look as interesting as normal because there's not a whole lot of future premium in the VIX, but we do watch all that stuff. But for the most part, I think it's going to be kind of a juice selling type environment here, at least for the next couple weeks.
And Mr. Alex, what are you keeping an eye on for the rest of this busy and hopefully glitch-free week?
I'm kind of with Andrew. I think we're going to grind for a little bit until we get a sense of what's going to come out of Washington with the debt ceiling. I think tapering is quantitative easing and tapering are coming to an end, and it's a fact of life. I mean, that's what we've seen in the bond markets, and that's what we've seen in the stock markets. So kind of keeping an eye on Washington to see what's going to happen there. And hopefully no more trading hiccups for a while.
And last but certainly not least, Senior Tosaw, what are you watching for the rest of the sessions this week?
Well, same things like what Alex and Andrew were saying. I was really looking at the treasuries, but now one thing that I'm looking at would be Apple a lot closer now. Just kind of curious to see if there's any reaction tomorrow, even though it would be, I guess, delayed theoretically from the big shutdown today. So that is it for now, and I am also waiting patiently.
You are always quite the patient fellow, sir. So that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Tosaw, what is coming up in the land of RCM?
We have the 3 building blocks of trading presented by Mr. Mike Tosaw coming up on the 29th of August. For more info on that, go to rcmaccess.com. And I am a very patient man, so long as I get what I want right away.
This Kavanaugh fellow, I've heard good things about him. I think people should tune into that one.
That you have.
Mr. Andrew, what is coming up in the land of the pit?
Mark actually is doing a CBOE webinar today which will be available for people, I'm sure, to download, I think, not sure, from the CBOE website once you hear this broadcast tomorrow. And again, look for us. We will be launching our new Platinum course, which is for all of you that have had questions about all the crazy stuff we talk about on the show. We're actually coursifying it, making it into an advanced course after our gold course. So anyway, our clients have asked for it, so we try to do what they want. So that should be coming, be launching the second week of Labor Day.
Always a good thing to keep the clients happy.
September.
Keep the clients happy when you're in a client-based business seems to be a good proposition.
Well, it's a lot of work, but we try.
Mentoring / client management, that is your job. And a fun job it is, sir, and you do it so well.
I try. Thank you.
All right, and last but not least, Mr. Viceroy, what is coming up in the land of OX?
A live event Saturday in Boston all day, free event. But if you're not in Boston, you can come to the website where it is electronically simulcast, and you can put questions into the speakers. So it's kind of like being there, but you can sit home with your slippers and your hot chocolate. And ironically, here after the close, the noise level has gone up. So I'm trying to figure out what markets are open. And I don't think this is after-hours stocks. It sounds like it's coming from the futures guys. So it sounds like something's going on. But we'll have to talk more about that on Monday then.
Yes, our listeners will find out, hopefully by the time they listen to this show tomorrow, exactly what is cooking. But I like the image of you, Alex, sitting there in your slippers and hot chocolate and your Viceroy cap. It's both intriguing and disturbing at the same time, which I suppose is a good mental image.
That's my way to attend a webinar.
I like that. And with that disturbing image in mind, folks, that's going to wrap it up here for this episode, this birthday episode of the Option Block. And on behalf of Andrew and Alex and Uncle Mike and, of course, myself, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this show and sending in such great questions. Keep it up, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.